one of the first lessons I learned in 1966, a friend of mine had retired from a company, took all of his life savings and bought a stock with it. And he was in some type of arbitrage program with the convertible bonds, and there was no way he could lose money, and sure enough, you know what happened. All of his money, which is like $600,000, went down to about $2,000. The stock was Curtis Publishing. And this warped this man, and he died, you know, not only impoverished, but I mean just twisted mentally, all because he was too bullheaded to use a stop. Oh, it'll go up. I know it'll go up. I got this all figured out. Oh, yeah, real smart guy. Real smart guy. You can outsmart yourself in this business real easily. He ended up living in the basement apartment of his father-in-law's house when he was 66 years old. And he was so warped that he'd go to newsstands with what meager amount of money that he had and buy, Curtis Publishing published Saturday Evening Post, buy copies of the Saturday Evening Post to make it look like the magazine was really in demand. That's how warped he became. Not because the deal went bad, but because he didn't use a stop. I've had 6 friends of mine commit suicide trading. All 6 of them had one thing in common. They didn't use stops. It's real easy to use a stop. Just place it. And I know most people say, well, I'm going to use a stop. They call it a mental stop. And that's a great name for it, because if you use a mental stop, you'll become mental. You really will. You'll become a mental case. You've got to place your stops, place them in the market, walk away from it, limit your loss. And this probably is a little redundant to you, but it's so terribly important, because I don't want to have more friends commit suicide. I've seen enough of that. I've had a belly full of that, believe me. I don't want to see people ending up impoverished and destroyed by the markets because they didn't use stops. So I'm just banging that over people's heads that you've got to use stops. You've got to actually place them in the market. And let me share this with you. In my own trading, I've had as many as like a couple thousand, 2,500 bonds on at a time, and I've seen markets go within one tick of my stop, and the stop is on the floor. It's a known stop. In my advisory service, I don't know if any of you have noticed this or not, but we've repeated it. Well, we had just this week, we had a market go within 1/2 tick of one of our stops, and then went right back up. That's not an unusual occurrence, and I've got a lot of subscribers that they don't necessarily go for your stop. Don't get this mind game going, oh, they're going to see my stop. Place your stop. That's your defensive mechanism. That's your shield. If you get stopped out, you got stopped out. Yeah, that goes with the territory. But if you don't get stopped, if you can't get stopped at because you didn't place it, who knows where you're going to end up. You're going to be crying and praying, literally praying to God that you can get out of the market, and you won't be able to. Yeah, and I've done that, I know. So make certain you use stops, and that they're real, that they're placed, that they're not a desk stop, they're not a mental stop. Real important position is never add to a losing trade. Never add to a losing position. I've done that. I did that in a crude oil. It was propane. Propane. I bought some propane, and I had pretty nice profit in it. It pulled back a little bit, and I had a little loss in it. I'll average my loss. So I bought more propane. Just before propane went locked limit down 17 days in a row. Cost me $375,000 to learn what I just told you. Don't ever add to a losing position. $375,000, that's a lot of money, folks. That's a year's salary or so. You know, and it's a huge amount of money because I added to a losing position. When I look back at my commodity timing and see where my biggest losses have been during the year, it's always I got so bullish that I bought one more. I've seen it. You just cannot do it. You cannot add to a losing position. So make that an absolute. Don't add to a losing position. If you do, man, you're doing it wrong. You're doing it wrong. Don't do it. Another thing that happens a lot is you make errors. I've made a lot of errors trading. I'll say buy instead of sell. Have you ever done that? Have you ever had that happen? Yeah. If you trade very much, it'll happen. Oh, I thought I told you buy. No, you said sell. I said sell? I meant buy. Or better, I got a great broker. I'll come say, sell 500 at the market, and he'll call me back and says, you bought 500 at the market? And I say, thanks. He said, but you said sell, didn't you? He said, but I knew you meant buy. So, you know, it depends on your broker relationship. But you will make errors. At some point, if you trade very much, you're going to say buy or sell or give the wrong price or whatever. Well, here's my advice on that. As soon as you find out it's an error, get out. Don't wait for it to move back. Don't wait for it, just get out. Ira Epstein is, you see Ira on television a lot. Got to know Ira a few years ago. Ira relates a couple of great stories, and I don't know how many, millions of orders he's executed for customers as a discount trader, a brokerage firm. And he said that is an unequivocal rule. If there's an error, you get out, you argue with it, arm wrestle about it later. But, you just got to get out because too many disasters have happened waiting, hoping, praying that it'll come back to your price. If you're wrong, get out. It's as simple as that. If you made an error, get out of it.